It's Tuesday, 17th of November, 2025. Welcome back to your news update on Blip Brief, small, but almost everything updated every weekday. We were away for a few days due to travel, but guess what? We are back.
And we are back to an economic picture that's running a lot hotter than many expected.
It really is. Okay, let's just dive straight in with the India macro pulse. Economists are now forecasting Q2 GDP growth accelerated to a strong 7.3%.
It's a very strong number.
So what's the mechanism behind that? What's driving that kind of speed?
It's really a result of strategic public spending finally, flowing through the system. We're seeing a huge impact from the government's capital expenditure.
The CapEx push.
Exactly. That's stimulating everything from infrastructure to jobs. And you combine that with a surprisingly resilient rural economy and an early boost from export shipments.
And you get real momentum.
You get genuine, sustainable momentum. It's not just a quick sugar rush. This is investment-driven growth.
And that strength seems to be translating directly to corporate balance sheets. Our data shows aggregate net profit growth for India Inc. is back in double digits.
Right, accelerating to a six-quarter high of 15.2%. That's for a sample of nearly 3,000 companies.
That is massive upward velocity.
It absolutely is. But for you to have the full picture, we do have to contextualize that 15.2%.
Cool.
A good portion of that acceleration is due to the lower base effect from last year. But what's fascinating is that even when you account for that, sectors like auto, cement, capital goods, and oil and gas, they all delivered fundamentally strong performances.
So it's broad-based profitability, not just a few isolated wins.
Precisely. And here's where it gets really interesting on the consumption side. We're seeing a visible, almost structural shift in how people are spending.
You mean the typical post-Diwali slump didn't happen this time?
It didn't. Festive demand just kept going. Some companies are reporting a continued year-on-year sales increase of between 10 and 20% after the prime shopping window closed.
So why is that spending stretching out? What's giving consumers that sustained confidence?
Well, improved affordability is one factor thanks to tax cuts. The early onset of winter is another, driving demand for specific goods. But the really unique insight here is this booming wed in India trend.
Tell us more about that, the Tier 2 city wedding boom.
It's simple economics, really, but it's powered by a national sentiment. Instead of these huge destination weddings abroad, affluent families are choosing domestic locations.
Often in Tier 2 cities.
Right, and that supports entire local supply chains from catering to textiles. These large events are now providing sustained, non-discretionary spending that traditional festivals alone just couldn't maintain.
Okay, so strong macro indicators, robust domestic consumption. Let's shift gears to the markets. The Nifty closed higher on Friday. For investors looking ahead, what's the major hurdle?
The primary challenge remains technical resistance. The market has to convincingly clear the 26,000 to 26,100 zone.
And that's acting as a sort of ceiling.
A crucial one, yes, both psychologically and technically. Breaching it is what's needed to convince the broader market that the next sustained leg of the rally has really begun.
And the pre-market indicator, GIF Nifty, was up, signaling a positive start. What's fundamentally supporting this optimism, even if it's cautious?
It's really the dual comfort of easing retail inflation data.
Suggesting the central bank might have some breathing room.
Exactly. And you combine that with the excellent corporate earnings season we just talked about, stability and performance, those are the pillars holding up sentiment right now.
Let's quickly note the volatility from Friday's close. We saw Eternal shares up by about 1.97% and Fart Electronics climbing 1.70%.
But on the other side, we saw declines in IT and auto. Infosys was down by 2.58%, and Tata Motors fell by 1.62%.
Now let's connect this to the broader trade picture, because that offers a useful contrast.
It really does. You have this roaring domestic demand, but the global consumer looks a bit tentative. For instance, coal imports surged by 13.54% in September.
Which is a direct reflection of domestic industrial and energy demand spiking ahead of the festive season.
Right. But then you look at luxury exports. Gems and jewelry exports declined sharply. We're talking a drop of 30.57% in October.
That's a huge divergence. So if our industrial activity is spiking, why did that export picture look so weak?
That raises a critical question for you to consider, doesn't it? Are Indian consumers effectively subsidizing global weakness right now? That drop in gems and jewelry points directly to softening consumer appetite in major Western and Middle Eastern markets.
It really underscores the importance of that domestic engine for insulating the Indian economy.
It certainly does. And domestically, capital is moving fast, especially in the startup ecosystem. The recent IPO cycle led to venture investors achieving exits of around 15,000 crore rupees.
That speaks volumes about the maturity and, frankly, the liquidity in the capital market here.
It's a massive proof point. And adding to that confidence, Sumitomo Mitsui Banking Corporation, SMBC, is open to raising its stake in Yes Bank.
And potentially even setting up a wholly owned subsidiary in India.
Which isn't just a bet on one bank. That signals a long-term strategic bet on the stability and future growth of the entire Indian financial market.
Okay, let's move globally. Asian markets opened with caution today. What's the anchor dragging down sentiment?
It remains the uncertainty around the U.S. Federal Reserve's next move on rates. Japan and Australia saw slight dips, while South Korea's equities, interestingly, managed a modest climb.
And in commodities.
Oil prices are showing some directional weakness, which is a big relief for an importing economy like India. On the other hand, gold is up.
A classic sign of that geopolitical and monetary policy anxiety hanging over investors.
It is. And speaking of anxiety, the crypto space delivered a brutal lesson in volatility. Bitcoin saw a major correction.
A crash, really. It fell by approximately 25.6% from its recent peak.
A 25% drop in a weekend is just staggering. That's the risk premium right there, in plain sight.
No kidding. On the geopolitical front, we have a potentially market-moving announcement from the U.S.
Yes. President Trump stated that Republicans are drafting legislation to impose severe sanctions on any country trading with Russia, and Iran could potentially be included.
What's the real implication of a law like that?
It signals a very aggressive push toward using secondary sanctions, basically penalizing third parties who trade with Moscow.
So it forces a choice.
It forces businesses and entire nations to choose between access to the U.S. financial system and maintaining those trade lanes with Russia. It significantly elevates risk.
And a couple of quick geopolitical hotspots to keep an eye on.
First, Bangladesh. Dhaka is under tight security ahead of a special tribunal's verdict against former Prime Minister Sheikh Hasina. There were some sporadic attacks overnight.
And second.
The Caribbean. A major U.S. aircraft carrier has arrived, escalating the military presence there as part of the administration's drug enforcement push targeting Venezuela.
Okay, let's bring it back to India and focus on tech and compliance, which are evolving so quickly. The new Digital Personal Data Protection, or DPDP, rules. That's a game changer.
It really is. And it's creating a massive new market out of thin air.
A new compliance gold rush. Our sources indicate this law is expected to unlock a compliance spending space of about 10,000 crore rupees over the next 3 years.
It is. And just consent management alone is projected to be about 10% of that huge investment. It shows the scale of the operational overhaul companies need to undertake.
But the feedback from legal experts is mixed. What's the friction point?
While everyone agrees with the intent, many legal commentators are flagging the potentially high compliance costs, especially for smaller companies.
And ambiguity in the rules themselves.
Exactly. The devil is always in the regulatory details, and businesses are waiting for clearer guidance on things like implementation and data breach protocols.
Meanwhile, the AI gold rush is extending far beyond just the tech firms.
Oh, absolutely. Non-tech companies in India are aggressively increasing their AI spending and hiring. Demand for AI professionals is up by anywhere from 25 to 50% compared to last year.
And this adoption is fundamentally changing user behavior, isn't it?
It is. Think about e-commerce giants like Amazon India and Flipkart. They are now optimizing product listings for better visibility on LLM chatbots, like ChatGPT and Gemini.
Why? Because people are starting their shopping journey there now.
Precisely. More and more consumers are asking a chatbot, what's the best noise-canceling headphone under 5,000 rupees? They're bypassing the traditional search bar completely.
To wrap up, we always like to end with an innovation that sort of redefines what we think is possible. Today, we're talking about achieving supercomputer-level AI processing with just light.
This breakthrough comes from Aalto University, and the core concept is just stunning efficiency. They found a way to execute complex AI tensor operations, the fundamental math behind all neural networks, using only a single pass of light.
A single instantaneous pass.
Yeah.
How do you even perform massive calculations that quickly?
Well, you bypass the electronic bottleneck. Instead of moving data with electrons, which creates heat and slows things down, this uses the inherent properties of light itself.
So you encode the data directly into the light waves.
You do, and the calculations happen instantly and simultaneously within the physical structure of the device itself. The physics of light is the computation.
So it happens instantaneously.
Exactly. It bypasses the bottleneck entirely. The takeaway here is profound. This offers a path to AI processing that is potentially vastly faster than even our fastest supercomputers. Instant computation, powered purely by physics and optics. That is the ultimate efficiency gain.
And just before you go, a quick note, this deep dive commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.